Traders, we're looking at S&P 500 and mini futures, the most traded market by the professionals. Right now we can see that the structure of the market is indicating spike in a channel, the bullish pattern that played out with the break new extreme fulfilled the trendline rule in price action. Push below indicated reversal, bearish reversal. So right now, as you can see, I'm looking for identifying the correct bearish channel as a price action trader. Following the trendline rules, right now, as you can see, this is still a quite rangy market. And right now the market is reversing to the downside. There was no reversal pattern, no failed second entry long. So right now I'm just going to be following the price action closely. I'm going to look for the right downtrend because I always want to have a downtrend present on the chart. And I'm going to be observing if we get some nice short setup. There's a chance we may go test this break area because price action, we tested it a little bit here, but there's a big chance price action want to see this level tested fully. Right now we can witness price action being a little bit more bullish. We came back, tested the important key level. Everything in price action happens for a reason. We pushed above EMA. This was the area where you're potentially looking for a quick little failed second entry short. By the way, you no longer expect new low for this downtrend because once you retrace too much of this push down, basically around the 60-70% mark, that's when you adapt to this uptrend. There was not even a second entry long. Right now the market is in its development phase. I can see that it is a little bit more bullish, but still pretty much rangy. There is no strong trend just yet. So I'm not going to be buying at these highs, waiting for market to give me the right opportunity to enter. Traders, I'm resuming the video as I'm taking an engulfing entry on a lower high. And I'm taking the engulfing entry because there was a massive momentum. We had a bullish bar working high, reversal down, and this looks so bearish. We're at the EMA, we're confirming the channel again. So I'm scalping 6 contracts going for 2 points, leaving 1 contract as a runner in case market does something unexpected. This is the lowest low of the correction, and we have first entry short, pullback, second entry short. At the EMA, we confirmed the trend line here again. Basically, the trend line got confirmed already here and here. So it's more selling pressure coming down the market at this level right here. So there's a second entry short at the EMA, and also we're bouncing off the channel. So I'm scalping 6 contracts, leaving 1 contract as a runner, and let's see if we can get the scalp here. There was another second entry short here, bouncing off the trend line. Problem is, look at my single bar. It was doji bar like this. I really needed to see better bar, and there was no lower high confirmations, unfortunately, even though it confirmed the channel nicely. And we got filled, it didn't really allow us to enter. And price action is retracing, but we reached our scalp. But you can see we identified the channel correctly. All of these 3 swings, structure is bearish. You're playing the channel, confirmation here again, and the confirmation here again. You want to make sure you have room to get out to these lows because there is some important area. We got the scalp here. So the correction played out with the break new high. Right now, I want to see new low for this downtrend, but I want to see a lower high. First second entry long would be great. Lower high, we'll see how it forms because it's starting to get a little bit consolidated. But also we can see there's some top of the trend range forming where you can consider selling high. So I may even jump on some lower high if it forms because we have 2-legged pullback to new extreme, bullish depletion. Channel down needs to get new low, following the trend line rule even inside of this overall structure. So you can see, even if the structure overall doesn't give you a clear picture, if you just follow the short-term channels, you can pretty much stay on the right side of the market for the most part. So be objective and follow the short-term channels. Look for confirmations. You can see geometric formation at the lows, at the highs will keep you on the right side of the market. Downtrend created a break, move to a new extreme. I'm not really thinking about buying just yet because every single time you break below the initial trend range, I mean the key entry point, key level right here, there's a chance that market may plummet lower. This is not typical trend range. So right now I'm just going to be waiting. We have a breakaway channel which according to rules needs to get new extreme. We have a second entry long, but you can see the second entry long is still not full at the EMA. So for this reason, I'm holding off here and I'm not entering. It is a tempting setup because broad 2 legs close to EMA, you need new high, but it's just not close enough. Not even tail is touching it, let alone the body. And in a situation like this where this is not a strong uptrend, I want to be careful right here. So for this reason, I'm waiting here. The uptrend ended up rallying higher strongly. It's a shame it didn't close to the EMA. You can see what would have happened. This entry was also new low, first entry short, second entry short failure. So double hypervoltage setup, also second entry long. You can see how nicely the candles are gliding over this channel. For this reason, I'm selecting a wider channel and expecting a breakout pullback, second entry long at the EMA now. We have visual to look at pullback, potentially double trap. Problem is EMA didn't hold, and it's a problem. This is an inside bar. It didn't even trigger below this previous bar. So I want to see push above EMA and a high low confirmation setup. I'm gonna wrap it up with my one single trade. So we can see even when the structure of the market is unclear, basically the big picture is indecision, we can still navigate the market accurately by following the short-term channels. This allows us to stay on the right side of the market and predict where the market is going to go. And you can even see the key levels, the high today key level right here during the pre-market structure came into play here, came into play here. We had a two-tier trend range and the bottom tier moved into upper tier, and even the resistance at the top transformed into breakout pullback pattern. There's a reason to every single movement in price action, and you can understand what's going to happen by following channels and looking for the proper key levels. Now I want to talk about this area because since you're trading a trend range, you're not widening the channel like this. And when you find yourself in a situation like this, take a look at the start of the channel. We suddenly don't have any confirmation here. There is too much empty room. You want channels to fit nicely. At the beginning of the channel, you want to have as many confirmations as you can. So you draw a channel wide like this. It's too wide for trend range. And what can also help you is when the channel is going to be too flat. Remember, every channel you expect should get new extreme. And when you find yourself trading a broad channel like this, by the time you get a break, this correction is going to be too strong that it's hard to imagine this downtrend getting new extreme. Every single time I'm trading a channel that is too flat, I always picture the situation, how the channel would look if there's going to be a break and a new extreme, and if it's too wide and this momentum would need to be too strong, I basically just follow the short-term channels. Now we had visual to like a pullback, which we skipped, and the reason why you want to skip it because we didn't just have uptrend, we were trading a trend range the whole time before. So there's a chance that the sellers will overwhelm the market, and for this reason I need to get a good setup because there's a chance we're going to go test the key level. Okay, so if we didn't trade the trend range, you can take this, but since we were trading the trend range, we broke out of the trend range, you need to respect the correction. We had overshoot, push above EMA, and according to trend line rules, this channel clearly needs to get new extreme. Break getting new extreme form, perfect price action, felt second entry short. Around this area, you're still playing the break in new high, but there was massive bullish momentum. And at this point, you need to start looking for wider channel because after break new high, you expect correction or reversal. And this is not happening at all, not even correction below EMA. So the trend is getting very, very strong, minimal bearish pullbacks. You can see consistent, gradual, healthy uptrend. We had a second entry long that was not full at the EMA. The reason why price action couldn't pull all the way to the EMA is the triple test. Actually, we can call this multiple test because we have kind of like a bounce here, 3, 4. So multiple test. Either way, the support is so strong, the price action could manage to go all the way here to this EMA. For this reason, it's a bit more aggressive, but also you have more reasons to enter. Not only second entry long, but also triple test. And the more reasons you have, the better. Now, then you have long congestion, so you don't really want to take a setup. And you can see 1, 2, 3, 4, 5, 6, 7, 8, 9 bars stacked right next to each other. Now, I marked this setup, even though I'm not a fan of this setup, because you have spiked down into congestion. So there's a clue you're probably going to get a longer second leg down. But if you took this right here, the risk is small, 1.5 points. I can see, you taking a chance here. The trend is quite strong. So even though the setup is congested, you can take a chance. Trading is about taking a risk. So if you took a step right here, not that big of a deal. Now we have a break. We expect new extreme of the uptrend. An uptrend had new extreme. And notice, once again, this is what you analyze when you're trading a trend like this. Minimal bearish pullbacks. This trend is still very, very strong. And if you take a look at 10,000 tick chart, you can actually find a better channel like this. This one fits really well on the higher time frame. You can see getting nice confirmation makes it fit really well. if you already have this channel, because I was on my break this entire time, but if you already have divided channel, you can actually consider this a green second entry long. But if you played the channel that we had with the break in extreme, you should be a little bit careful because the second entry long just formed after break in extreme. Either way, you can see how trend is getting strong. We had a high low, but it's a bad bar, far away from the EMA with the body, doji-ish, too much congestion. But then we had another attempt, and look at this big bearish bar. Just look at how many sellers sold directly into EMA, new low, first entry short, second entry short failure, and this massive bullish reversal completely overpowered these last bars, and all the sellers got trapped. When EMA is holding every single time on a strong trend like this, is a great high probability setup, and you can tell eventually we had a break and a new extreme, and the trend is very, very strong. You can see market just continues working higher. Strong uptrend to finish the day with. I hope you had a good trading day. I'm gonna wrap it up and talk to you next time. Good luck with your trading.